It seems that everything is up, up, up. The first thing I want to talk about is inflation up. The second thing I want to look at is stocks up. And the third thing is the risk up. Everything seems to be going up today, and that's not necessarily a good thing. We need to break that down. I'm going to give you all of what you need to know right here. So let's begin. You can take a look at your friend and mine, Jerome Powell, saying that taper could start in 2021 with no rush on rate hike. I think it's important to make it very distinct in between the rate hikes, the interest rates, and where they are today, rock bottom, and the tapering. Tapering means specifically that they will reduce the amount of money that they print per month. Not reducing the balance sheet. They are nowhere near that at all. And they highlighted that specifically at Jackson Hole. They made the markets, give them what they need. And essentially easy money is the policy, of course. But they wanted to specifically mention that reductions are not intended as a signal on rate hikes. So they really defined that and made it known right now. They did a great job because the markets loved it. Stocks closed higher, spurred by Powell comments. And you could see that among the top 3 stock markets, the NASDAQ performed very well. It's been waiting for those easy monetary policies to come through. If you take a look at what happened with the repo operations, again, $1.1 trillion. This continues to be excessive. I've been covering it, and it has been over $1 trillion now for quite some time. Now, the markets love this one as well because inflation means that everything is going up. Well, they love that. The markets love it. Investors love it. And of course, you see specifically that this is terrible for the consumer. This is terrible for the average individual and their wallet. But nobody really seems to care anymore as long as the 401ks and the housing prices continue to go up. You could see the core PCE rate, that is the personal consumption expenditure price index, continuing to increase, and looking at personal spending that has declined because these two are directly correlated. Okay, you're going to have this being an issue for people. If things are too expensive, how can they buy anything and everything? This right here, 3.6%, it just shows you how much people are really dealing with right now at this time when their food prices are up, their car prices are up, their electricity prices are up, everything is up, okay? What else is up? Cryptos. Cryptos are, of course, up and away. Everything from Dogecoin to Bitcoin have all been loving what had happened here with the Federal Reserve. And of course, you're seeing Bitcoin right now, 49,000. Hasn't been able to get back up above that 50,000 that we saw just recently, but perhaps this will give it a push in that direction. Risk is definitely on. This is the article just talking about the fact that, look, this is at 3.6% in their lovely gauge of core PCE, 3.6%, biggest since the 1990s. And that's real, okay, when we look at what people are paying, not the percentage, of course, because that's way too low, but the fact that it is increasing right now like we've never seen before. Even the White House more than doubles its inflation forecast in a new update. The administration expects consumer prices to rise 4.8% in the fourth quarter from a year earlier. Lifts projections for growth this year. Yes, growth is fantastic. When you're spending more money, that adds to the GDP. That adds to the growth. But we know that that's not actually the growth that we want. You're seeing it in the form of price inflation. Sad. Okay, now this right here just shows you this Goldman Sachs U.S. equity sentiment indicator. And believe it or not, this is now at the lowest we have seen since early in 2020. Okay? And why? What's going on? Well, there are so many factors here. The markets are at the most high level they've been ever in history. You have the consumer sentiment down horribly. You have everything being extremely expensive. You've got valuations that are absurd. And of course, this has been declining. It's been up and down sort of, but that last peak that was experienced earlier in 2021, it's been declining ever since. As the prices of these equities increase, this of course makes it less attractive. Look at the global equity fund flows. This has not stopped the money from rolling in, I'll tell you that. This chart goes back from 2019 up until the present, but you're seeing the amount of money being just ridiculous, to say the least. Looking at the amount of options volume, this is going back from 2017. Just consistently more and more and more retail traders are using options when, quite frankly, they don't know what they're doing. And this, in general anyway, is fantastic on the way up and will be very, very painful on the way down. Now, I want to talk about what's happening with the eviction moratoriums and a lot of changes happening there. But first, the Money GPS insights. The markets were given assurance that everything's going to remain easy, low interest rates. They're not going to do anything to spook the markets. At this point here, the markets realize specifically that they've got weeks at least before any changes happen. So at this point, it is still pedal to the metal. Risk on remains for now, so investors have poured their money in. It's been going on now, of course, as you saw in those previous charts for a while, but today specifically, it highlighted really how much risk they're willing to take. So here we have this article out of the Wall Street Journal. Renters prepare for eviction after Supreme Court ruling. Just a fraction of the $47 billion in federal aid meant to help tenants and landlords has been distributed. So that's interesting. So this is also connected to this article here, which I have here. The Supreme Court late on Thursday blocked the CDC from enforcing the federal moratorium on eviction renters right now. And it's basically just saying that their efforts to continue the moratorium, even though the court had signaled that the action lacked a proper legal basis. So I'm interested to see what happens here. Obviously, this is going to be some big changes. If this actually does happen, and we start to see waves and waves of people being evicted, this will be just devastating to the economy as a whole, I do believe. It's something that probably should have been resolved by now through other means, whether that's getting people back to work, whether that's, somehow to be making this resolved. That did not happen. And so what you have here is just government intervention coming in, preventing this from occurring. And it doesn't look like it has been very positive over this period. Nothing really has. There's been no resolution to this, okay? And we're seeing how individuals are being affected by the maximum level of intervention, and ultimately it has not resulted in a real, healthy, and robust recovery. There's no doubt about that. And so essentially what they're saying here is that Congress never gave the CDC the staggering amount of power that it had and that it claimed to have. And, they're getting into the details. Already what's happening here, but this is just an important piece of the puzzle that I think that people should be aware of, because this is something that could affect the economy directly. So I will bring you any updates as they come out. Fed is stoking another real estate price bubble that will wipe out home equity. Okay, this is important because what they're saying is, look, if anybody bought in the last year, they're paying at these lofty levels, and there's very, very, let's say inconsistent level that we've been seeing historically right now. When things go straight up, that's never a good sign. If it's sort of up and down, kind of all the way leading to a higher price, that's healthy because there are corrections along the way. But there are no corrections today. They don't allow that to happen. And of course, that just generally just ends very badly. And there was a quote here that I wanted to read to you. In what world could you possibly have imagined that 10-year yields would be closer to 1.2%? That's absolutely impossible. The absolutely impossible is literally commonplace now. That leads into another important lesson. The dynamics of investing public matter as much as the fundamentals of the companies and economies that are subject of all the analysis. So that I just want to show you that things have really changed, okay? And this just brings us back to the points I was making initially in the video, just the record annualized year-to-date equity inflows. Hasn't been anything like this before ever. And when they say there's so much money on the sidelines, look how much money has been deployed. Whether this is coming from the retail side, from the institutional side, the central banks, it doesn't matter. The amount of money flowing in, we've never seen anything like it. Okay, and obviously we're pulling this from the EPFR. As always, they are the ones that track all the movements of the money. The number of S&P all-time highs in 2021 is on track to be the second most in a calendar year since 1928. Huge, huge. Okay, and then you have this. I found this to be very interesting. If you have the time to read it, I posted this in the community or blog section of the channel. If you have time to read it, I would highly recommend it. The social media stars who move markets. If you read particularly towards the bottom of the article, they talk about the fact that if you want to be successful, making these videos on this platform, you have to be bullish. If you are not bullish, you will not be successful. Even people who are bullish, I shouldn't say it like that. You can't even talk about aspects that would result in a decline in the price of anything, okay? It's just not going to happen. It's not a good thing. It's bad for business. And they document the fact that, look, if you do something that is negative, one individual said he's going to get 60,000 views. If he talks about something positive, he's going to get 200,000 views on a daily video. So it just shows you how these things work. All right. And then last but not least, I just wanted to show you this. Wall Street is looking to Reddit for investment advice. Can you believe this? I mean, these are the things that they are able to go in, take advantage of, because they see that sort of the direction that the retail investor is what they're doing, and then they simply front run them. They can go in front of them. Citadel does this all the time using the orders they pull in from Robinhood and so on. But anyway, that's all for this video. If you're not already an insider, you can become one here at this up here and themoneygps.com, and hit that like button to support the channel. And if you haven't seen this video already, you definitely want to check it out. Click it, and I'll see you there.